Hey, welcome back to Wait Let Me Invest. I'm Zuko, and today we're diving into the December update of my Trading 212 portfolio. Let's jump straight in. My portfolio is currently valued at £1,556. That's around £1,000, or slightly more than £1,000 increase since the last month. However, keep in mind that I've invested around £1,000 this month. My account value, however, is around £3 more than the portfolio value. That's because of the cash that I have on the side from dividends that I've earned this month, and also from the Porsche automobile holding shares that I sold a few weeks ago, which I have not reinvested. My current rate of return is around 2%. These numbers don't take into account any dividends that I've received. It also doesn't take into account any money that I've gained or lost from buying or selling investments. So at the very end of this video, I'll show you my overall portfolio tracker, and we'll look at my actual cash and cash return for this portfolio. I currently hold 16 investments. Tesla, as you can see, makes up the majority of my portfolio, followed by some big tech companies, Google, Microsoft, Apple, and then another car manufacturing company, Porsche, which I'm a huge fan of. That makes up my top 5. The rest are here on the left side, as you can see. A couple of things to note that has changed since my last Trading 212 update. One of it is that I no longer have pies. In my previous video, I had 2 pies, one comprised of 5 ETFs and another called Zuko, which I set up to allocate my investments nicely to companies that I really admire. I've exported them all to individual investments because I knew that come next year I want to spend more time analyzing companies and figuring out which companies to for the new year. So I've exported them, like I've mentioned before. The other change as well, the other change that I want to talk about is I want this portfolio to only have companies, like individual company stocks, with the majority of them paying dividends. As you can see here, I have about 5 ETFs, which I have actually set a sell limit order for. So hopefully this won't be here in the next video, and I would have sold all of this for a profit, and I would have more cash to invest. Since I already have a stocks and shares ISA account with Vanguard, I figured I'd just keep all my ETFs there, and I'd focus on individual companies within this account, and also mostly on dividend paying companies. Now let's take a look at the current holdings. First we got AMD, which is up 23%. I have about 0.02 shares of them. I think it's a good company. As you know, the demand for AI is expected to grow in the new year, which in turn means more demand for CPUs and GPUs. And AMD has, I think, set up a new deal with OpenAI, Microsoft, and Meta for them to use their new AI chips. So their share price, I think, will only go up. Next up, we have Alphabet, which is Google, which I'm up 5.69%, and I hold just shy of 2 shares. They have also announced their new multimodal language processor, which is an AI called Gemini. I really admire the way they package their products. It kind of reminds me of Apple, you know. So the Gemini model comes in multiple sizes. They have the Gemini Nano, the Gemini Pro, and the Gemini Ultra. And it kind of reminds me of Apple and how they package their products. You have the iPhone S, iPhone Pros, you know, and I do see them going quite a long way with this because these products are also modular, which means that you can attach them together to have a more powerful system. Then we have Amazon, which is also up around 4.6%, and I have about 0.3 shares of them. They are one of the Magnificent 7 tech stocks. I'm not really sure how the new year would unfold for them, but I feel like it's a mistake not to have them in your portfolio. The only downside that I have with this stock, and the same with AMD, is that they don't pay dividends at the moment. They put their profits back into the business, which means that they're expanding. But I hope that would change. You know, they're a good company, they're profitable. A lot of people use them. Next up, we have Apple, and it is up 1.68% for me. I hold about 1.3 shares of them. It's a very big company, and people are definitely going to buy Apple products. You walk around the street, or you go to the mall, you'd see it. I think hundreds of people. There are people with Apple product. That's never going to change. They also released a new VR headset, which I think is innovative, but I doubt the average person like myself would be able to afford it with the cost of living rising, and the price of that headset is just really high. But I feel like Apple has always seemed to find their feet with like good products, so we might see more of that in the new year, depending on what they release. And they also pay dividends, which I think is good. Next up, we have Blackstone. They're a global leader in alternative asset management and financial services, providing solutions like private equity, real estate, public debt, equity, etc. There's been some worrying news for them. Their chief accounting officer recently sold about 5,500 shares of the company, and he's also sold more than 15,000 shares and has also not made any purchases, which is worrying, right? You would say, why would someone within the company sell all their shares unless they think that it's not going to? Anyway, in my opinion, I think that it's not going to grow, or maybe they might just need that liquidity for something. Who knows? But a good thing is they pay dividends, which I think I'm gonna hold on to this company. They're up about 19%, and I hold about like 0.16 shares. And next up, we have Deliveroo. They're down 7.98%. This is a result of the recent deal in EU to force companies like Uber and Deliveroo to classify riders as employees, which is going to cost them billions a year. But it's also reported that they're planning to enter the DIY and beauty products industry, meaning that they would, I guess, distribute, or you'd be able to order them and then have them delivered to your house, which could turn things around. Downside is they don't pay dividends, they reinvest all the profits, or if they do have any profits. So that could be an indicator that they're more focused on expanding their business. Next up, we have Lucid, which is down 32%, which is crazy. Their CFO recently resigned 2 weeks ago, which is always worrying. They have weak financials and a high cash burn rate. Although some say that the stock could rise again, and with their new SUV called Gravity to begin production in late 2024, we could see that happening in 2025. I also think that they are at the forefront of sport performing EVs. If you've not seen videos comparing them to the Tesla Model S and how quick their sedans are, I would advise you to have a look at them. Next up, we have Microsoft. They're up around 4%, and I hold about 0.7 shares. They pay dividends, they're partnered with OpenAI, and OpenAI has shot up massively in the last year. As you all know, ChatGPT has been amazing, although they've recently been accused of copyright infringement from the New York Times for abusing the newspaper's intellectual property to train large language models. Next up, we have Porsche. I'm a huge fan of their cars. They do pay dividends once a year, and I also feel like they are undervalued at the moment. The company is down 6.94%, and I hold about 2 shares of them. I just feel like it's a very good company. It's well managed, although these charts say otherwise. Next up, we have Realty Income. They are up around 3%, and I hold about one share. They pay monthly dividends, and their dividends have grown year on year, which is always a good sign if you're looking to focus your portfolio on dividend paying companies. I'm going to skip all the ETFs. As I've mentioned before, I've set a sell order for all of them, as you can see. At the sell limit order, so once the price hits the number that I've set it for, it would issue the order, and I would always get a profit. And I'll get a profit for all of them, which is what I'm hoping for, so I can reinvest them in all these other companies. Finally, we have Tesla. They don't pay dividends. They are up 7.58%, and I hold about 1.2 shares of the company. Their growth rate is insane. And then they have the Cybertruck coming out. Although I feel like Tesla is a bit overvalued at the moment. At the moment, they have a high PE ratio as compared to other car manufacturing companies. So I would not want to buy any of their shares at the moment unless I see a dip. Now let's take a look at my dividends that I've earned this month. It's been a busy month. I've received about 5 dividend payouts. I mean, it's the end of the quarter. It's quite a bit of companies that pay dividends, so that's something that I was expecting. Got about 11 cents. I've got about 11 pence from Microsoft, about 4 pence from Realty Income, and 16 pence from the Vanguard FTSE All-World High Dividend Yield. Another one from Vanguard, 42 pence, and another one around 14 pence. My total dividends is currently at £1.94. Now let's hop into my overall portfolio tracker. This was inspired by Your Average Investor. I'll leave a link to his channel in the description below if you want to check him out. It's really good. I started recording my videos after watching his channel a lot, and it's really inspired me to share my journey as well. So as you can see, first off, I want to go through my trading 212 portfolio. As you can see, my cash and cash rate of return is only 1.18%. I've invested about £1,000 this month. I've received about 92 pence in dividends and also interest in cash that I have in my account that I haven't reinvested. These are the FX exchange rate fees and all the fees that come with buying stocks on Trading 212. The current portfolio value, I've just taken this from recently from my Trading 212 account. As you can see as well, my monthly change from last month is around 187%, but that's mostly from all the money from the £1,000 that I've invested into the account. So that means that I've only gained about £12 from last month. In total, I've invested across all 3 platforms around £33,000. I've gained about £33,000 as well. That's basically doubled my investments since then. I've basically 3x whatever money that I put into my crypto investments. Mostly coming from the last 2 months. As you can see, I think that's insane. It's a bit, as you know, crypto is very volatile, so this could change rapidly, could go down and I could lose everything. I'm not going to invest anything into crypto for a while, as the market looks bullish at the moment. So for the next year, I'm only focused on my Trading 212 account and my Vanguard Stocks and Shares ISA. Stay safe, see you in the next video. Peace out.